You've been told your whole life that buying a home is the ultimate goal, that renting is just throwing money away. Friends say it, family repeats it, financial gurus swear by it. But what if I told you they're not entirely right? Cut to a stressed out renter, flipping through bills, hearing rent has gone up again. Narrator: sure, renting feels like a money pit sometimes. Your rent goes up every year. You build no equity, and it can seem like you're just paying off someone else's mortgage. Cut to a homeowner dealing with leaking pipes, rising property taxes, and a huge mortgage payment. Narrator: but here's what most people don't realize. Buying a home isn't just a one-time down payment and a fixed monthly mortgage. It comes with hidden costs, ongoing maintenance, fluctuating interest rates, and long-term financial commitment. And in some cases, you might actually lose more money buying than renting. Cut to black screen with bold white text. There's a smarter way to decide. Narrator: introducing the 8.71% rule, a simple, powerful formula that helps you decide, with logic, not emotion, whether it's smarter to rent or buy. Upbeat music fades in. Cut to clean animation of house versus apartment. Narrator: it's not about following the crowd or doing what your uncle did 15 years ago. It's about understanding your numbers in your city at this time, because the right move for you might be renting, or it might be buying, but you'll never know unless you look at the math. Zoom in on text. Let's break it down. Narrator: in this video, we'll show you exactly how the 8.71% rule works, with real-life examples, tools you can use today, and a fresh perspective on a choice that could impact your finances for decades. Let's walk through a quick example. Imagine you're looking at a house that costs $300,000. The same house is available to rent for $2,000 per month, so annual rent is $2,000 times 12, which equals $24,000. Text on screen: $24,000 divided by $300,000 equals 0.08 gives 8%. Narrator: now divide that $24,000 by the $300,000 price tag. You get 0.08 or 8% rent yield. Visual meter appears. 8% is below the 8.71% mark. Narrator: that's below 8.71%, which means in this case, renting might actually be the smarter financial move. Visual: if rent yield is above 8.71%, show buy in green. If below, show rent in blue. Narrator: but if the rent yield was, say, 9% or higher, that could mean buying is the better deal in the long run. Pause. Zoom in on 8.71%. Narrator: but why 8.71% specifically? This number comes from a mix of factors: average mortgage rates, property taxes, maintenance, opportunity cost, and even inflation. Visual: icons for interest, taxes, upkeep, etc. Narrator: it's not perfect, but it's a reliable benchmark, a tipping point where the cost of renting and buying starts to even out. Visual person: thinking, calculator, and house side by side. Narrator: instead of guessing or going with your gut, use the 8.71% rule to guide your decision. It turns a complex, emotional choice into something you can actually calculate. First, we find the annual rent. $2,100 times 12 months equals $25,200 per year. Text updates: $25,200 divided by $350,000 equals 0.072 equals 7.2%. Narrator: now divide that annual rent by the purchase price. $25,200 divided by $350,000 equals 0.072, or 7.2% rent yield. Visual meter shows 7.2% below the 8.71% threshold. Narrator: that's well below our 8.71% benchmark. Text on screen: according to the rule gives rent. Narrator and sub. Based on the 8.71% rule, renting this house might be the better option financially. Cut to a breakdown chart: renting versus buying over 5 years. Narrator: now let's look at a 5-year horizon. If you rent, you'll spend around $126,000 over 5 years. If you buy, you're likely paying more, once you include mortgage interest, closing costs, property taxes, insurance, and maintenance. Visual icons show extra costs stacking up under buying. Narrator: and remember, in the early years of a mortgage, most of your payments go toward interest, not equity. Cut to a person weighing two signs: flexibility versus equity. Narrator: renting gives you more flexibility. Buying gives you equity, but at a cost, so you've got to ask yourself, what makes sense for your goals, not just emotionally, but financially. Visual: final pop-up text: the numbers tell the truth. Narrator: the 8.71% rule doesn't guarantee perfection, but it gives you clarity. It's not about owning or renting being right. It's about what's right for you. When you own a home, there are hidden costs most people forget about. Let's break them down. Visual icons for each cost appear one by one. Property taxes, depending on your location. These can cost thousands every year. Homeowners insurance required by lenders, and not cheap. Maintenance and repairs, on average, 1 to 2% of your home's value every year. That's $3,500 to $7,000 annually on a $350,000 home. HOA fees, if your home is part of an association. That's another monthly cost. Mortgage interest, especially in the early years. A large portion of your payment goes toward interest, not equity. Visual. All these costs stack up next to the original mortgage payment. Narrator. So while your mortgage might be $1,900, your true monthly cost of ownership could be closer to $2,700 or more. Cut to renter sipping coffee. Relaxing, no maintenance tools around narrator. Renting, on the other hand, usually means no surprise expenses, no leaking roof to fix, no lawn to replace, no property tax bill in the mail. Visual, dollar signs, slowly draining from the homeowner's pocket. Narrator. Over time, these small differences can add up to tens of thousands of dollars, even more if home prices don't rise as expected. Cut to balance scale with flexibility on one side and ownership on the other. Narrator. This isn't about saying one option is always better. It's about being realistic about the long-term financial commitment that comes with owning a home. Visual reminder of the 8.71% rule. Narrator. And that's why the 8.71% rule matters, because true affordability isn't just what you pay monthly, it's what you pay over years, in real money. So, what's the final verdict? Should you rent or should you buy? Visual text on screen. It depends. Narrator. The truth is, there's no one-size-fits-all answer. What works for one person might be a terrible decision for another. That's why the 8.71% rule is so powerful, because it helps you make a data-driven decision that's personal to your situation. Cut to a checklist graphic. Monthly rent, home purchase price, local taxes and insurance, maintenance costs, financial goals. Narrator. Take the numbers. Use the formula. Ask yourself, does renting give me flexibility I value right now? Or does owning help me build long-term stability and equity? Cut to fast-paced shots of different lifestyles. Young professionals renting in the city, families buying in the suburbs. Narrator. Renting isn't throwing money away, and buying isn't always a smart investment. They're just different tools for different stages of life. Visual. Big bold text appears. Use the rule. Know the real cost. Narrator. If the rent yield is below 8.71%, renting may save you money. If it's above, buying could be the smarter financial move. Cut to host or presenter speaking directly to camera. Narrator. Before you sign that lease or lock in that 30-year mortgage, take a step back. Run the numbers. Think long-term, and don't let pressure or outdated advice push you in the wrong direction. Visual like, subscribe, and bell icon animation. Narrator. If this helped bring clarity to your home decision, give this video a like, subscribe for more smart financial tips, and turn on notifications so you never miss an update. Final text on screen. Make smart moves. Your future depends on it. Narrator. Thanks for watching, and remember, the smartest move is the one you understand.